Hello, hello, hello. Hope everyone's doing well tonight. We are live on our online buyer masterclass with Mike Brown. I'm your host. I've got two co-hosts. I've got Nick Dawson, who's our mortgage lender, and Keith Badner, who's been our insurance agent and business partner for quite some time. So looking forward to having all you guys here tonight. We've got Dr. Taj in here. Hey, Taj, nice to see you in here. We're going to give it about 1 or 2 more minutes to see who pops in. I tell you what, if you would tell us where you're coming in from, we sure like to know. I'm sure it's somewhere here in San Diego County, but please go ahead and drop in where you're from. I'm going to type in Carlsbad because that's where I'm at. Get started here in 1 moment. It's Taj and El Cajon. Very cool. All right, who else we got? I've been from Carlsbad. We got Keith from Carlsbad, Nick from Escondido. Myra's coming in. Hey, Myra, Linda. Kevin from Linda Vista. Welcome to our call tonight. Thank you so much for being here. Grace is coming in. Hey, Grace. Welcome to our call. Thank you so much for being here tonight. This is a really informative call, guys. Hey, Keith. We just want this not to be a overwhelming and scary process. You know, buying a home can be scary, but I think tonight with Nick and Keith and I, we're going to talk all about the real estate side of this. We're going to talk about the mortgage side of this. We're going to talk about what it takes in order to get insurance here in California now. So I think by the time we're done here in about an hour, I think you're going to find the process to be not as overwhelming if you think it might be. So bear with us here for a minute. I'm going to give it 1 more minute just to make sure we got a few more people are popping in so they don't feel lost. But hey, guys, if you're just popping in, please feel free to go ahead and put where you're coming from. We'd love to see where you're coming in from tonight. I've got actually some people I've invited that I work with. I have 125 agents across the country in 22 states, and I've got agents working with buyers, and I invited some of them to attend tonight because they want to see what our online masterclass for buyers is. So hopefully they'll be coming in this evening as well. I know we have some people on the East Coast, Chicago, and some other areas. That'll be fun. And guys, feel free. We want to make this interactive. So when you have any questions, feel free to drop it into the chat, okay? And once you've done that, we will answer that to the best of our abilities. Well, welcome to our call. And as you'll see here, we want to be able to talk about the 5 costly mistakes that we've seen over our years of being in this business that sometimes buyers make. And we're going to try to educate you on what not to do to make the process so much easier and easier for you, but yet, we want to save you as much money as we possibly can, okay? Okay. Now, as a new home buyer, go ahead and put it in the chat, guys, but are you feeling stressed? Are you not sure where to start? Maybe you're feeling concerned. Can I even qualify for a loan for a home? Maybe uncertain about the home buying process completely, right? I know a lot of us feel anxious. Where do I look for a home? Do I look in North County, South County, East County? Where do I look for a home? Confused? Should I buy a house or a condo or townhome, even new construction? So we're going to cover all those topics tonight, and hopefully we'll be able to clarify that for you as well. So if you guys want to go ahead and put it in there, if you're feeling stressed, concerned, uncertain, anxious, go ahead and let us know how you're feeling now, because I think we're not going to feel that way at the very end of our presentation this evening. All right? All right, awesome. All right, here's the agenda. There's Nick Dawson and myself, and you'll see Keith here in a little bit as well. Who are we? We're going to do an introduction here in just a moment. I'm going to breeze through some client testimonials, but I've been a real estate broker here in San Diego, Carlsbad area for 25 years. I was also a mortgage broker before that as well. We're going to discuss this evening those 5 critical mistakes to avoid when buying a home. And we're going to have a Q&A session for you. So if you have any ideas in terms of clarification, feel free to put it in the chat and we'll address those. And then we're going to give you an opportunity at the end to set up a one-on-one strategy appointment. You're not committing to anything, guys, but if you want to talk to Nick and I personally and just talk about your specific needs, we'll set up a Zoom call and we'll do that with you, okay? That way it'll be a little bit more private. Not everyone's hearing everything, but tonight is just basically information, but other than that, we'll do something private. Fair enough? All right. Here's my introduction, guys. Again, Mike Brown. I've been a real estate broker for 25 years. I manage the Brown Team Real Estate Group. I've got agents all across the country. I have people in Orange County as well here in San Diego. And I've been privileged to be able to do a lot of work with Nick Dawson over the years. I think it's almost 15 years now that Nick and I have been doing mortgage business together.
Yep.
In fact, you can see in the picture there where we're doing some of our podcasts together with some of our clients and so on. And there's some of my clients there in the pictures. It's the Brownstein Real Estate Group. And, part of that is Bill Furty, who's up in Orange County, Nick Dawson, Jessica Fleming's our transaction coordinator, Keith Badner is our insurance agent. So we have a lot to offer you guys. And we like to say it's really a one-stop shop, because why go all over the place when you have a team of people right here? And all of us been in the business for more than 10 to 15 years, and we can answer all your questions for you, okay? The next slide is going to be Nick. Nick, you want to tell everybody about yourself?
Yeah. So, Mike, sorry for the technical issues. You can hear me okay, correct?
Absolutely. Yep.
Okay. You can't see me. Is that right?
I don't see you, but I can hear you.
I'm sorry. Well, I'm so excited to be here tonight. Thank you so much for having me. Yeah, Mike and I, we have a very long history of working together. Been in the business 25 years. Here to assist and answer any questions you guys have. Obviously, we got a lot of information to cover tonight. I'm just very, very excited to be here.
Awesome. Love it. Thanks, Nick.
Yeah.
You can see in the door corner, they're not only doing podcasts, we've done a lot of videos and green screen stuff and had a lot of fun over the years. We always say, guys, if we got to work, we got to make it fun, right? Why should we work? We're not having fun doing it. So
absolutely.
All right. I'm not going to go through all these, but we have a lot of buyer client referrals. I just had one I was going to touch base on a little bit. The very bottom one here, Kevin and Lauren Mitchell. I want to talk about being in for the long run. This is a brand new couple. They just got married. They wanted to buy a home. And at the time we found a home they loved, but it was a short sale. And I'm a short sale specialist as well. And I had to work with the lender. And believe it or not, it took us 18 months to close on this house. And they stood with me. I stood with them. We worked with the bank. We provided everything they ever wanted. And we got them that house. And they're still in that house today. So I did want to share that, guys. They're super happy. It says here they're 2 kids. They now have 4 kids. So they've been very happy in that house. What are the steps for home ownership? Guys, first and foremost, thank you for coming here tonight. It's to come to this class to learn everything you can about the home buying process. Next, you want to work with Nick Dawson or your own personal banker to get yourself pre-approved for a home loan. Then once you've been pre-approved, the fun part of it really starts out. We're going to go out and find that dream home for you. We're going to do a big search. We're going to take a look at what you qualify for, and we're going to go out and find those homes and then make a really good, aggressive, negotiated offer to find that home for you. And we want you to move in. Okay. So that's the process we're going to be talking about tonight. The first part of this process is going to be talking a little bit about the mortgage side that Nick's going to be handling, and we'll go into insurance, and then I'll be handling the real estate side on the back end. So feel free, though, to drop in the chat any questions you have. All right. Mistake number 1, not checking with one of us to find out what loan programs you qualify for. Okay. And there's all sorts of programs out there. There's, for first-time home buyers and other professionals. And Nick, if you'd like to expand on this for us, I'd appreciate it.
Absolutely. Yeah. So there's lots of different really good products out there, depending on your unique situation. We want to dive deep. If we do a little one-on-one, Mike, I think there's a banner that you can put on the screen if we want to schedule a one-on-one. But, if you're, active duty military or a veteran, if you're in different professions, doctors, things of that nature, nurses, teachers, there's lots of different unique programs out there for different professions that can offer you benefits when it comes to buying a home. So we want to really explore all those options and go deep on your one-on-one, session to make sure that you do qualify for the right program based on your unique situation. So that's all I really want to mention on this slide.
All right. Awesome. Thank you, Nick.
Yeah, of course.
Oops. Let me click on this. So now we can move to the next one. There we go. Guys, there's the opportunities out there for first-time home buyers if you happen to be one for grants. I mean, I worked with Nick for my nephew and some other people, but we were able to get him a grant years ago now, but he was able to get into a house. So Nick, you want to talk a little bit about home buyer grants that are available for first-time home buyers?
Yeah, so grants they're based at the county level, so we can get access to different funds that you can tap into. It's a grant that's used for down payment Typically, it's an FHA loan, which requires a 3.5% down payment, but we can tap into some of these programs, and that 3.5% that is required for the down payment can come from these municipalities. And so you can essentially buy a house without having to have any money out of pocket. It's a really cool program. There's certain parameters you have to qualify for, income restrictions,
Right.
certain things, but conceptually, it's a great offering for people that are looking to buy a house that may have not had an opportunity to save up for a down payment. This is a way to do that.
Absolutely. The government wants to try to make it as affordable as possible. I do know that we live in a very expensive area here in San Diego County, but there are ways to get homes, and with our team, we'll be able to help you do that. Okay. Thanks, Nick.
Absolutely.
Okay. The mistake number 2 we don't want you to make is not getting a pre-approval. Some people will say pre-qualified. There's a difference between pre-qual and pre-approval. So, Nick, would you like to talk a little bit about that for us on the 3 pillars of approval?
Absolutely. So when we're looking to do a pre-approval, there's a few things we want to look for. We want to look at your credit, your income, and your down payment. I think of it like a 3-legged stool. If you have 2 of the 3, it's going to be strong, but you want all 3 legs to make it work. So, a credit score, we're going to look at your credit. You don't have to have perfect credit to buy a house. You can have scores all the way into the high 500s, and there's loan programs for you. But we want to look at your credit profile and determine, do you make your payments on time, things like that. That's one piece of it. And then we're going to look at your income. We're going to look at what job history you have. We're going to look at all those components that are going to help you make sure that you can qualify to make the monthly mortgage payment. That's another piece. And then lastly, we want to know how much money you want to put down. You don't have to have a large down payment. A lot of first-time home buyers, they're looking for little to no down payment. Those options do exist, but we want to make sure that we put all 3 pieces to the puzzle together to make sure that you qualify for the right loan that makes sense for your situation. And everyone has a unique situation.
And guys, it's so important to get that pre-approval because you really don't know what you can qualify for and what you can afford. And there's nothing worse than going out and finding this beautiful property like that picture right there. That's a $4 million house. I fell in love with that, but I can't afford to buy it. So we want to make sure that we work with you and find out exactly what you qualify for and find that perfect dream home for you. Okay?
Absolutely.
Loan pre-approval. Nick, you want to expand on this for us?
Yeah, so there's a few different things we want to talk about here. So we want to look at, like the things all that I mentioned before. We want to look at your credit. We want to look at your income, your assets. Being pre-approved is much more important than just being pre-qualified. When you're pre-qualified, that's just a phone call. It's like talking about your situation, how much money you make, how much money you want to put down, what do we think your credit score is. That's a very high-level conversation. A pre-approval is a much stronger position to be in. When you go to write an offer to buy a house and you're saying to that seller, I'm very serious about buying your house, the pre-approval letter helps them feel confident that you've talked to a lender that understands all your numbers, all the math, and says, yes, this person can, in fact, qualify to buy the house. So you want to have that pre-approval letter before you get in the car with someone like Mike and go and start looking at houses. That's the number one thing you want to do.
All right. Awesome. All right. Guys, it's really important about the loan approval process, the do's and don'ts. So, Nick, tell us a little bit about what we should and should not do.
Yeah. So the do's of getting pre-approved, we like consistency. We want to make sure you're in the same job. Typically we look back 2 years to make sure there's not a lot of money flowing in and out of different bank accounts, so that you're being consistent and that things are being very streamlined. We don't want to see a lot of movement and things that are changing quickly. It makes it harder for you to get qualified for a loan. We don't want you to be making any large purchases. We've seen it time and time again where someone gets into a contract to buy a house. They're like, oh, I'm going to go buy a new car. It's like, no. You can't do that when you're getting ready to buy a house. It can mess the whole thing up. So we want to make sure everything stays the same. Don't make any large purchases. Don't take out any new credit cards. Don't do things like that. You want to be very boring on paper financially when you're in escrow to buy a house.
Yeah. Well, we know you're super excited, guys, and that couch would look perfect in my new house. Don't buy that. Don't buy that couch yet. Okay, just wait until the home closes, and then you can buy all the stuff you want. But absolutely. I've seen it. I was a mortgage broker also for many years, and I have seen deals crash and burn because people got super excited up front and did things they shouldn't have, and then all of a sudden their debt to income ratio changed, and they couldn't do the deal. So That's why we're doing these seminars now. We want to be able to spell all this out for you to make sure you understand what you should be aware of and to move forward. Okay? All right. 4 types of mortgages. Nick, these are pretty exciting.
Yeah, so those are the main pillars that we look at. Most people think conventional loan, 20% down payment. That's kind of the gold standard of what people like typically think about when they're going to go buy a house. But the reality is there's lots of different loan programs out there.
Yeah.
FHA is a great product for first-time home buyers. It's a much lower down payment requirement, typically 3.5%. So that's a great product for people that are just getting started in the home buying process. Then we've got jumbo loans. Jumbo is, big word, jumbo, multi-million-dollar homes. Anytime your loan amount goes over the conforming loan limit, which is just north of $1 million in San Diego, you're going to fall into the jumbo category. And then lastly, you got VA loans, again, for active duty servicemen and women and or veterans. They're going to, have the opportunity to use their VA benefit, which would allow them to, buy a house using the VA, which is 100% financing and a great program for people that qualify for that.
Yep. Guys, and that's how I met Nick almost 15 years ago it's my dental hygienist, and Nick was friends with them, and they are on a VA loan, and that's how we got them into their beautiful beach condo. So
yeah,
it absolutely works. Okay.
Remember that.
Yeah, it was fun. All right. Guys, there's things you should and cannot do in terms of borrowing money and those type of things. So Nick, you want to expand on this because people may not understand that there's certain things you can and cannot do.
Before I do, I want to ask in the chat, is there any questions people have? And we're kind of talking back and forth. We want this to be very interactive. So if anyone has any questions about anything we're talking about, we'd love for you to, put those in the chat so we can, have a conversation here about this and not make it feel like we're just kind of talking here.
Yeah.
So,
looks like Dr. Taj has one question.
Okay. To be approved, do you have to have a house in mind? No, great question. So usually the first step would be to talk to someone like myself. Let's figure out a roadmap. Let's get you pre-approved. You do not have to have a house in mind, and we can set a program or plan in place that says, here's the amount of money that you qualify for, whether it's a $500,000 home, $1 million home, whatever that case may be. We're going to give you a plan. So then you can go talk to someone like Mike, and Mike's going to say, okay, now we know how much house you qualify for. Let's go find the perfect home for you. So that's a great question. Thank you so much for that question.
Awesome.
And any other questions, feel free to fire those off. So appreciate that. As far as what you can use for a down payment, a lot of people don't know that a 401k or retirement account is absolutely a great resource to use to help you for a down payment. You can borrow against your 401k as a down payment and pay interest on that loan that you're borrowing from back to yourself. You're not paying interest to a bank, you're paying it back to yourself.
Yeah.
People that have done a great job of investing in their retirement can use that and leverage that as a down payment. Having a gift. Gifts are not like Christmas presents. They're like a gift from a relative. Like you have a parent, a sibling, an aunt, and uncle that wants to give you funds for a down payment. That's a great way to help you stair step into home ownership, as well as having a gift from a relative. Of course, you can use your stocks, bonds, real estate portfolio, not real estate, but investment portfolio. You cannot use credit cards as a down payment, like a cash advance on a credit card. Cannot do that. You can't borrow money or get a loan. And cash is a 4-letter word that is bad in the real estate world. You can't have cash under your bed, in a shoebox, in a safe, and say, this is my money for my down payment. It has to be verified and documented.
Yeah, it can't come out from underneath the mattress. It's got to be seasoned. Okay.
Yep.
And Nick, Kevin's got a question there in the chat. You want to address that?
Is a mortgage broker another term for a loan broker? Oh, that's a great question. So the term mortgage broker is loosely used. Loan broker would be the same terminology. There's a broker and there's a banker. Those are the two terminologies that we hear often. A mortgage broker, someone like myself, has access to all the different loan programs in the market. So I can shop around and look for the best program for what a person may need. A mortgage banker is someone that works for a bank. Like you've heard of Chase, Wells Fargo, Bank of America. They work for a company and they offer the loan programs that exist for that company they work for. But mortgage brokers they have a little bit bigger net. They can look around and shop a little bit more.
Right. Absolutely. And Dr. Taj said, can we use 401k, right? Yes, you can use your 401k. Yes.
100%.
Okay. All right.
You would have to check with your 401k company and see what the terms are. Sometimes they have different like limitations on how much money you can borrow. But in theory, yes, you can use a 401k for some or all of your down payment.
Absolutely. Guys, there's a lot of terms that we use in the mortgage industry. So we thought we'd put together a quick little synopsis here of the top 20 mortgage terms. I'm not going to go through every one of these. Nick will pick out a couple to talk about. You will be getting a recap of this presentation in your email tomorrow. So you can go back and look at all of this and reiterate in terms of what you want to look over again. But Nick, you want to hit a couple of the important ones like maybe DTI and so on?
Yeah, debt to income ratio is probably one of the most popular ones. Number 4. So we look at what is your overall debt? What is your monthly expenses, whether it's your mortgage payment, your car payments, your credit cards, all the things that you pay for on a monthly basis. We take that number and we offset that based on your monthly income. So we look at what is your income divided by your monthly expenses, and that's what creates a percentage or a ratio of your debt to income ratio. We typically like to see that number under 50%, varies by loan program, but that's a high level understanding of what DTI is. A lot of these are, self-explanatory. Interest rate, the money you're borrowing money at. Assets is, what is the money you have available for a down payment? I think there's a second slide here with some other stuff, Mike. So these are all like, generic terms that we look at and talk about. Escrow is another kind of like weird one. It's like there's a company that will collect the money for all the different parts, whether it's the lender that's putting the loan in, the down payment from the buyer, the real estate agents and their commission checks. It all flows through escrow and gets paid out. The seller that receives the money when they sell their house, it all goes through an escrow company. So a lot of great, terms here, but those are some of the highlights.
Yeah. Guys, escrow is a third-party independent company. They may be associated with a title company, but they will handle the transaction for both sides. And so when you get under contract, you'll be talking to me as your buyer's agent, or we'll also be talking, on the other side, the listing side, but all that goes through escrow. Okay. So clarify that a little bit for you. Okay. Does that make sense? If so, please go ahead and give us the thumbs up in the chat, guys. We love to make sure that we're providing as much value tonight as possible. We appreciate it. All right. On this one is, what fees you need paid before closing. Nick, I'm going to have you handle the first 3 and I'll handle 4 and 5.
Yeah. So typically you're going to have an appraisal on any house you buy. We want to make sure the loan that we're giving you, the collateral, the house you're buying is worth what you're paying for it. So we're going to pay an appraiser to go out and inspect the home and give us a figure and say, this is what this house is worth. They're going to look at other homes in the area to verify that what you're paying matches what is in the marketplace. So that's usually about $500 to $700, and you will pay for that upfront. And that's about the main fee that you will be out of pocket if you decide not to buy the house. You're going to pay the appraiser because we want to know what the house is worth. And if you end up changing your mind for whatever reason, or you don't get approved for the loan, or get cold feet, you're not buying the house, that fee gets paid for upfront. Title and escrow fees, those vary based on purchase price. Those do not get paid for until you get ready to close. So you're never going to pay those in advance. And then prepaid taxes and insurance, most of the time we collect those upfront and those get added into your mortgage payment. So it's kind of like an auto pay for the property tax and the homeowner's insurance. That's going to be baked in and built into your payment to ensure that the insurance is paid on time and your property taxes are paid on time. We're going to collect a upfront amount reserve that'll go into your escrow account to help you make sure those are paid on time.
Yeah, and those are known as impounds, guys. So when you hear that word, you have an idea what that means: taxes and insurance. Okay. Another part of the home buying process is when you get under contract, you want to do a home inspection, and those are very important to find out exactly the worthiness of that home. What may be wrong with it. Those typically run about $550 to $600. Okay, and then a termite inspection. That's typically on the seller side. It is negotiable at times, but typically on the seller side, they'll do a termite inspection. It's about $75. And we want to find out if there's any Section 1 repairs that need to be done, i.e. wood rot or termites. And guys, we love living here in San Diego with the weather and the beaches, but you know what? Termites love it here too. So don't be shocked that there's termites in those homes, all right? Okay. Any questions on that, guys? All right. Okay. Any questions on the loan pre-approval process and the mortgage programs, guys? Feel free to go ahead and drop it in the chat. If you feel good, just go ahead and give us a thumbs up. If you want, that's fine too. But hopefully, we're pretty thorough on that. We wanted to explain all that to you, and again, we want to provide as much value as possible.
Yes,
Kevin, got a question here.
the appraisal fee is typically paid for after the offer is accepted. You typically get into contract. We want to make sure that the house is locked up or secure. It's yours to buy, and then we will order the appraisal once that's happened. So that's when we engage with the appraiser.
Absolutely. Okay. Let me see. Does the seller have the option to drop out of the deal? Good question. The seller, once they're under contract, guys, in the state of California, it's very hard for them to get out of the deal. There actually has to be a breach of contract by the buyer for them to get out. I mean, they could get out, but they could be sued, right? Now, the buyers have all sorts of ways of getting out of a contract, with the home inspection, the appraisal, termite, all of that. That's all negotiable. So there's a lot of ways for a buyer to get out of the contract. If you just find out this may not be the right home for you, there are ways. But sellers, very difficult to get out. They can, but it's very difficult to get out of that. All right? All right.
I've got to say, I'm glad to see a lot of these great questions coming out. This is awesome.
Absolutely love it, guys. I love it being interactive because we're all here to learn together and try to simplify the process for you. All right?
Hey, Mike, are you throwing that little click up for people to be able to book a one?
Yeah, I've did that a couple of times. I'll do it again there. So
okay, cool.
That'll go into.
We'd love to have a one-on-one consult so we can go a little deeper with each person on the call.
Guys, in case you have to, we hope you can stay the entire time. But if you have to leave early, go ahead and when that pops up, go ahead and schedule a one-on-one with Nick and I, and you're going to see you can also do a one-on-one with Keith as well on his QR code if you have questions on insurance. But we love to have these one-on-one conferences so we can be specific to your needs and be able to help you any way we can. All right.
Hey, real quick, Laura says she's having a bad connection. Is anyone else having a bad connection? I know Keith's saying he can hear okay. Anyone else having a bad time hearing us on the call here? I'm sorry, Laura, you're saying you're having a hard time. Is your volume turned up, or? Really sorry about that.
Yeah, I'm not sure. Unfortunately, at times on these live webinars, you may have a few issues technically, but hopefully we'll try to go over that. You will get a recap on this as well in your email. Okay. So mistake number 3, guys, going to the listing agent to buy your home. A lot of people think they can leverage with an agent to say, well, I'll just go to him and he can just take some of his commission and help me out. Well, there is some truth to that. However, when an agent does dual agency, that's handling the buyer and seller side of the deal. Those are 2 separate transactions. And I'll cover a couple of things here in a minute, but that is not the best way to go. Absolutely not the best way to go for a buyer. Okay. Let me explain to you why that is. There's a direct conflict of interest right there. The listing agent is under contract to sell that house for the seller. He or she may not be in the best position to negotiate for you and fight for you and fight for your interests because they're already under contract for them. They may or may not give you any money, right? Because when you have 2 transactions, agents pay their brokers. They've got all sorts of E&O fees. They have transaction fees. People think that all the brokers out there and the agents make all this money. Guys, it's not that true at all. There's a ton of money that has to be paid out, and every agent must work for a real estate broker, and that broker is taking their percentage right off the top, right? So there's not as much money as people think to be able to help. Now, I've helped my clients, and you're going to see here a little bit later on that Nick and I will provide a bonus to our people that work with us to help you cover some of your closing costs, okay? It could cost you thousands of dollars by trying to work with the listing agent and not having your own buyer's agent that's going to advocate for you. We want someone that's going to be there to work for you, not for the listing agent and the seller, okay? So again, our job is to protect your money, your terms, and your future. All right. Let's see. I think Kevin had a question there. You got gradually louder. Good. Okay. I'm glad you can hear that. Very good. Okay. Hire an experienced buyer's agent, guys. There's a picture of Bill Ferdy. He's my top Orange County agent. Bill and I go back over 40 years. He's one of my best friends, and he's a fantastic agent. He and I were national sales directors in the medical field together, and he's a great guy, and he loves working with buyers. And here's a picture of the gentleman that he helped buy a house for, and it's a great pic with him and his dog and holding the big key. So we have a lot of people in our organization that can help you. Mistake number 4. We're getting into the nitty gritty now, guys. Skipping the home inspection. Back during the pandemic, and I know Keith and Nick know about this as well, but I saw people, they were so desperate to get a house, they would waive the home inspection. They would waive the termite inspection. They would waive maybe a roof inspection, all these different things that protects them. Those are your out to be able to get out of a contract. And so you don't want to, do something like that and maybe not be aware of deal breakers that could happen. You lessen your negotiating power when you waive all these things. When you don't have a home inspection, there may be mold in that house that you're not aware of, right? And you may not be aware of what the future repair costs might be if you don't have a home inspection being done. So we highly recommend that you do a home inspection. And if there is mold found, that we have companies to work with in order to get all that taken care of. There may have been an issue where a home had some additions or remodels. They never pulled any permits for it. It may not be permitted correctly or not at all through the city. And that's a liability you're going to pick up on, right? If you buy the house. There may be structural issues. We really want to work with you on safety and structural issues on those homes. And we know what to look out for as well. And we will accompany you on your home inspection. And then we'll go through the summary together. And then I will get you on a Zoom call together. And we'll go through each and every item on that home inspection. And we'll recommend what I think and what you think we really want to ask the seller for. And nowadays, in most cases, sellers are not doing all the repairs themselves. They're issuing a credit, which makes it a little bit easier for you as a buyer, because that way you can pick out the contractors and the people you want to do the repair. Otherwise, you're going to rely on that seller. They may pick his third cousin to repair the roof or something of that sort. So, seller credits right now are actually quite good. And guys, electrical and plumbing issues. A lot of guys forget, you want to scope the sewer line. If that house has been around for 30 or 40 years, they got big trees in the front yard, chances are that sewer line has got a ton of stuff in it. So there's a lot of things with our 25 years of experience that we're going to recommend to you. And just so you're aware, homes in California are sold as is. Sellers do not have to do anything to a property. And we may come across that on a negotiation. However, if they come across like that, we've got a few options. We can walk away as well. So, we always like to negotiate in good faith on both sides. We don't want to do a 50-point punch-out list. Nobody wants to see that. But if it's structural and safety, we definitely want to handle those, and we'll get sellers to give us some credit so you guys can pick your own contractors. Any questions on home inspection, guys? Because I know it's really important. And there's a lot there. So feel free to go ahead and put it in the chat if you guys got questions. Okay. All right. We'll keep moving on. Mistake number 5 is not taking the HOA home and condo documents or CC&Rs seriously. You're not reading through those. When you get those guys from the seller, they have to provide you with a clean copy of those prior to closing. You'll have 5 days to go through those. Believe me, they're tedious, they're long, there's a lot of stuff. But I will be looking through those as well. And I will make notes. And then when I get you on a Zoom call or in person, we're going to cover those. But here's some of the things you want to be aware of on the CC&Rs, is that some of these HOAs may not have their reserves. There may be issues involving the playgrounds, the pools, the amenities. They have no reserves. They can't fix anything. So we want to find out how much in the reserves they have. Are they planning on raising the rents or the HOA fees? Probably not the rent, but the HOA fees drastically over the next few years. Or maybe they're thinking about doing an assessment. Sometimes they'll say an assessment of $3,000, $4,000, $5,000 per house on a condo or townhome because they want to redo the parking lot or something of that sort. We want to find out about that. Maybe you ask the listing agent, hey, I got 3 dogs. Can I have 3 dogs here? And the listing agent says yes. It doesn't matter what the listing agent says, guys. We want to know what the CC&Rs say that's legal for you to have, how many pets and what size you can have, okay? Ongoing, this is a big one, ongoing litigation. Is the HOA involved in litigation? Do they have the money to take care of it? What if they're being sued and they don't have the money for that? We want to find out about that. And this next one down, I'm going to tell you really quickly. It's called SB 326. That is involving balconies here in the state of California. That's for condos or townhomes, okay? I had a listing down in San Diego, and the buyers had sent out a condo cert, and I know Nick knows what that is. I think Keith does as well. They want to find out everything about the condo and all the information on that. They found out that HOA, they did do a SB 326 inspection, but they would not provide a copy of that. Well, most lenders, if it's a Fannie and Freddie product, they will not lend if they don't have a copy of the SB 326 inspection. So that deal, the buyers had to pull out, and I had to go out and make that a cash deal. And I found a cash buyer, and they didn't really care about the balcony things. They knew it wasn't a problem. But that's something we have to be on the lookout for. There is the new law now called SB 410 that these HOAs absolutely must provide that copy, and we will be making sure of that as well. But again, HOA documents, they're not just paperwork. They're there to reveal financial risk, lifestyle restrictions. You know, a lot of information's in there, and we really want you to go through that. So there's a lot there. So feel free to put in the chat, guys. If you have any information, any questions on homeowner associations, please feel free to put it in there, and we'll address it for you the best we can. Okay. Looks like we're okay, and audio is coming back good. Great. Okay. Okay. New home construction, guys. I know a lot about this because I have sold a ton of new home construction. My ex-wife was one of the top sellers here in San Diego for Lennar and Shea Homes, and there's a lot there. Couple things up front, guys. We all like to look at beautiful new homes and so on, but they're going to ask you to register as soon as you come in. If you do not have me or one of our buyer's agents working with you, do not register on that. Because once you've registered, you've given away your ability to be represented by us. And just because they're a builder doesn't mean that you do not need a buyer's agent. Remember, that sales rep that's so nice and offering you coffee and cookies, they work for the builder. They do not work for you. They don't represent you. And you really do need to have an advocate. The builder's paying us, not you, right? So it really is an advantage to you to work with us. If you see a new development, say, hey, Mike, I want to go look at this. We'll set it up. We'll go in there together. I'll register you in there. And then that way I'm there to negotiate the contract and upgrades and all sorts of things I can negotiate on your behalf. I've been able to help my clients get washers and dryers. I've been able to get them window coverings and landscaping and all sorts of things, depending on how motivated that builder is in order to move. You know, they can't move to another phase unless like phase one is ready to go. They got to sell everything in phase one. They can't go to phase two. And then, so, you know, they'll be more motivated to work with us on that last house that's for sale in phase one, those type of things that I'm always reaching out to these guys and finding out what they have, and we can talk to them about it. Guys, these contracts are one-sided. They are not in your favor, okay? They are somewhat negotiable, not typically on price. They're negotiable on the upgrades, and that's something that I'm very good at, and I can work with you on upgrades. I want you to have the most amazing home possible, but yet you want to be aware of what's available for upgrades to help you sell this home maybe 5 or 10 years down the road, okay? And some of these builders, guys, their deposits are non-refundable, okay? So that's something that we want to negotiate up front and make sure of, and only we would do that because we're used to that, and I've sold, you know, hundreds and hundreds of homes. They're going to ask you to be pre-qualified by their lender. That's fine. They just want to make sure you're pre-qualified. They can do that, but you do not have to use their lender. They may say they want to give you $5,000 credit to use their lender, but their rate is going to be much higher than what Nick can provide you. So we will allow the pre-qual to happen, but we want you to work and get the best deal from Nick and his team, okay? What else we got? Independent oversight, strong advocacy. You know, new construction, it's not simpler. It's not easier. It's just different than retail, okay? Again, local knowledge isn't expensive, it's priceless. And with Nick and Keith and myself, we're all local here in San Diego County. A lot of us live up here in North County, and we're here to help you and make the buying process easier for you. So before we go to the next slide, guys, any questions on new home construction? Because it's exciting to go out and look at it, but we want you to be aware of the pitfalls you can have. Anything in the chat? Okay, well, that sounds good. Go ahead and throw a thumbs up if you like. That'd be awesome. Okay, this is a point I'm going to ask Keith to come off mute. And Keith Badner has been a business partner and a close personal friend of mine for many, many years. Our girls went to school together. We were in Indian Princesses together. And Keith is a really knowledgeable and great guy, and he knows insurance. So Keith, give us the information on what's happening in California in terms of insurance for homes. Thanks so much.
Thank you, Mike, and thank you, Nick. First of all, to everyone else who's on the chat, if you are a first-time home buyer, just mark a letter Y for yes. The reason why is we want to make sure we tailor some of the information for you. Let me jump into one other thing here. Certainly, Mike and Nick, myself included, bring a lot of experience, and we'd like to educate our clients, and we'd like to have a lot of excitement around doing the business process here. This is your opportunity. Let's learn. Let me jump into insurance. So many people might think, oh, insurance was that commodity that I could pick up at the last second when I'm reaching the end of some sort of transaction. And that was true at one point. But as COVID first hit, and then a great catastrophic chaos in the insurance market in many different states, including California, which is mostly fixed, has just really changed the process quite a bit. There are plenty of solutions, but not as easy as you might think. So a couple things here on the screen. Location matters. Why? Well, buy a home wherever you want. Just recognize the closer you are to an open field, a undeveloped area, that's fire-prone area. There is insurance, and there's lots of things you can do to protect your home. Just be aware of that. That is one of the challenges there. The size of the home and also the makeup of the home. Two homes the same size, but one has a lot of upgrades, is cost different for insurance than one that has less upgrades, or a larger home with the same upgrades would cost more than a smaller one. That's okay. These are factored in, but these are part of the things you should be aware of. The affordability. Having been in real estate and mortgage myself in the past, one of the things that Mike mentioned earlier on was the debt to income. And that basically takes a look at all that you have in the way of income against all the costs that it keeps the house. And the home insurance is a part of that. Right. So there are ways to solve for that problem. So just be aware that there's a way to do it. Just plan in advance. I can't emphasize it enough. Get to your insurance person as fast as possible, me or somebody else. Lender requirements. So again, this is Mike and Nick have tremendous background. Nick and I would be able to understand quickly whether or not the loan has this particular requirement, and the insurance can provide for that. Again, I've been able to solve a need for home insurance for anyone at any time. Sometimes it takes a little more effort, but it comes down to professionals talking with each other, which is why we're all talking together right now. And then should you buy a California or earthquake insurance? Well, we do live in earthquake country. And I'm a big believer in, generally speaking, all insurance protects you from catastrophes. And earthquake is one of probably the best examples, because in most places it's not that expensive. And I know it may never happen until one day it does. Yeah. And one of the key features there is called loss of use. And I can't emphasize this enough. In your regular home insurance or earthquake, when you can't live in the house, you got to live someplace else. You still have to pay the mortgage. So the loss insurance becomes, loss of uses becomes very important. Right. Now, I'm also going to post my information in the chat in case somebody wants to get more information later on. But this is a great time to ask me one or two questions about insurance.
Absolutely, guys. We also have the QR code. You want to do that. But I've seen guys that when we get under contract, I want you to reach out to Keith and his team immediately on that, because it is taking a lot longer now for insurance than it used to be. Like Keith said, it used to be like the last 3 or 4 days you get insurance and it's done. You get a binder and you're good to go. That's not the case anymore in California. And Keith, really quick, tell them a little about the California Fair Plan, because that's something they may or may not be aware of.
Yeah, that ties into Claire's question. Again, feel free to post questions. The California Fair Plan is commonly known as the insurer of last resort. the concept is when all other insurance companies said, well, that's just too risky. There is a market not directed by the state, but it was organized so that insurers would pay into a fund that this organization, the California Fair Plan, would be the insurer of last resort. It is mostly just for fire. Therefore, it wouldn't cover liability. It wouldn't cover water leak. It wouldn't cover theft. So there are solutions for that, and that is what's known as a DIC policy, difference in condition. The difference of a standard policy, except for the fire, is all the other parts you just talked about. But Claire did point out something about flood insurance and fire zones. Let me tie into that real quick. So the California Fair Plan is being used much more frequently when you are in a fire zone. There's not like a special number or a barometer you can put out and go, oh, it's a fire zone area. First of all, just take a look at a map, right? If you look at a map, you see a lot of vegetation nearby. It's a clue. Yeah. I do this often, so does my staff. We'll take a look at a property just to kind of give you some advice. Yeah, it looks like we're going to need this kind of issue. There's going to be a fire zone. It's okay. Just ask. That's my motto. So it's not clean cut. Then there's a follow-up question about flood. Flood is handled by the National Flood Insurance Program, NFIP. And they actually do the flood maps. So they survey the entire country periodically, and they look for what has caused what's commonly known as a 100-year flood. There's a 500-year flood, 1,000-year flood. All that matters is that the likelihood of a flood may or may not exist. And based on those maps, they will indicate that it is. And a bank will say you must have flood insurance in that case. Not many homes need it, but some do. Right. And I see another question. Do you need extra insurance near beaches due to tsunami zones? That's not the case here. I can't speak to the rest of the world or the country, but that's not a difference. Although coastal zones have different issues, so there could be a slight difference there.
Yeah.
And then the last question here, do we need to have home insurance established before escrow closes? Technically, no. However, I really am a big believer. This is exactly why I want to work with Mike and Nick on this, is because they look ahead. And there's nothing more important than have time on your side.
Right.
And if you wait till the last second, you don't have time on your side. If you do it in the beginning, you win. Nick and Mike, back to you.
Thanks, Keith. Awesome. A couple of things really.
Great info.
NHD. Guys, if you're buying a house in an area you may not be familiar with, NHD is a natural hazard disclosure. And that's going to be provided by the seller for you. But it's going to talk all about the fire zones, the flood zones, everything, earthquake faults, everything in that area where that home's being purchased. And that can help you with the information to provide to Nick and his team in terms of what type of, Keith and his team, for what kind of insurance you might need. So it's called the Natural Hazard Disclosure in HD. Okay. All right. Thanks. That was awesome. Okay. I'm going to hit the old call to action. Let's see. There we go. With that, let's get to the next slide. There
you go, Nick.
The camera's working.
Oh, awesome. Love to see you, buddy. Well, guys, we've been through most of this, but right now it's kind of just a check how you guys are doing. Are you still feeling a little bit stressed or feeling a little uncertain, or we've been able to answer a lot of questions for you, maybe make that home buying process just a little bit simpler for you so you're not quite as anxious? Go ahead and give us a thumbs up, or want to put it in the chat. Feel free to do that. What our goal was is try to really clarify everything for you, because there's a lot to it. We weren't born knowing how to buy a home, but we definitely want to make it easier for you as well. So do you feel that your time was well spent tonight and this evening in terms of the seminar and what we provided for you? Go ahead and give us a thumbs up on that. Are you feeling more confident now? We sure hope so, because I think that now you've learned quite a bit, that you go ahead and go down here and click on the call to action. There we go. Show that again. Set up a one-on-one with Nick and I, and we can bring Keith in as well if you got insurance questions on that. And we can talk specifically on your needs and what your areas you're looking for, financial, job status, all that kind of stuff, right? So we can do all that together in one Zoom call.
I just put my contact info in the chat too. If someone wants to reach out directly, we can set up a time.
So here's again an opportunity to speak with our team one-on-one. And we're offering free consultations all this week and all next week, guys. We want to do it while it's really fresh in your mind that you attended the buyer seminar. Okay. And then next steps, book a call with Nick and I to discuss your personal situation. Act now to get pre-approved. You don't want to wait. When you find that beautiful home and all of a sudden you're not pre-approved, we really need you to do that up front. And the fun part starts. Now we get to go house shopping and find that dream home. Okay. And now I told you guys about this earlier. If you utilize Nick and I for buying your home, we'd love for you to use Keith as well for your insurance, that we will give you $1,000 credit towards your closing costs in escrow. That's how much we appreciate you working with us, and that we can help you get into that home. So click on that, schedule your private session, work with us, and we'd love to go out there and get you loan approved, find that house for you, and help you get moved in. That'd be awesome. Okay, any questions at all, guys, on anything that we discussed? Feel free to drop it in there. Thumbs up. I'm going to hit this again really quick so you do it again. If you want to schedule a one-on-one with us. But there's a lot here, and I know it may be overwhelming. That's why we're going to send you a recap tomorrow so you can watch it over the next couple of days or watch it over the weekend. And 1 second. There we go. We're saying thank you, and then you'll see that. But right here, guys, is my interactive website. That's my QR code. Feel free. I have hundreds and hundreds of people hit this website every single day. There's a search button, home search. You can go in there anytime you want and search for a home, right? If you have a kind of an idea, an area, and want to say, well, what's it like in Escondido? What's it like in San Marcos? What's it like in Carlsbad or Encinitas or whatever? You may live in San Diego and don't know what North County is like. You may want to look around. Feel free. It's absolutely free for you to utilize the website and our search function, and we're always here to help you any way we can. So on that, we got a lot of thumbs up, and guys, we really do appreciate the thumbs up and taking the time to meet with us tonight. We really do appreciate that. And I'm going to hit this again. If we have any more people want to schedule, and let's see if we have any more slides. I think that's the last slide. So I'm going to stop sharing here. There we go, Nick and I, and there we are. Anyway, guys, last minute for Q&A. We're not in a rush to get off. If you guys got questions, we're here to answer them for you. So feel free to drop them in the chat. And no question is a bad question, right?
Absolutely.
We realize that some of you are first-time home buyers and maybe haven't had a home for a while. Things change every year. That's why we take all these classes and do things all the time to stay up on everything. So we're here to do whatever we can to help make it easier for you. All right?
You're welcome, Grace. Thank you so much for being here.
Yeah, we appreciate it, Grace. Thank you for the nice words. We appreciate it. Laura, thank you. We got all these other people here. We got Claire. Thank you so much, Claire, for being here. We got Dr. Taj. We got who else we got in here? So we got a few more people. Keith and Nick, as always, guys. Thank you for not only being great friends and business partners, but you guys are amazing for being here tonight as well. So, all right, guys. If that's no other questions, we will end it in 1 hour. So we stayed within the hour time frame. Thank you again so much for being here. You guys have a wonderful evening, and look forward to the recap coming out to you tomorrow. Okay? Thanks so much.
Thank you, guys. Okay, see ya.
Bye.